Okay, so you went to closing, you signed the closing papers, and you're anticipating that later in that afternoon or possibly the next day you're going to get the keys to the house and that everything is done. Well, that's not always the case, and increasingly so in the COVID-19 environment. There are a couple of really big no-nos that you cannot do after you sign your closing papers, and you better pay attention to this because you don't want to miss the opportunity to get your keys. So thanks for coming into thecreditjungle.com. This is George Anderson. And first off, I want to thank my good friend Rob Aubrey. We had an incident last week where we were doing a podcast, and I was borrowing my son's laptop because mine's too junky and just doesn't work anymore, and I couldn't get his to work. And anyway, long story short, in the FedEx yesterday, up shows this webcam. And I was like, Rob, thank you. So Rob knows my limitations with technology, and while we're all mitigating COVID-19, Rob Aubrey at Aubrey & Associates is mitigating my shortcomings in technology. So thank you, Rob, for that. This is, I think the audio and everything on this in the video is a great improvement over my phone and my little 4K camera that I use for recording other videos. So, but anyway, there's four things that you cannot do after you sign your closing papers or immediately before you go in to purchase a home, or even if you're refinancing a home. And one of the things is that some of this stuff sounds obvious, but it's happened, okay? Number one, don't quit your job. There's going to be a verbal verification that the closer is going to make after she sends the closing documents, but before she sends the wire, before the money gets sent to the title company. So don't quit your job. But also now, in one of the new changes there is that we would do a verbal verification. The closer will call up and ask, is so-and-so still employed? And if the answer is yes, it was just always a yes-no answer. If the answer was yes, it was great, okay, they're still working there. But now they're asking some additional questions. All the lenders are doing this. They want to know, has there been a change in the hours? Has there been furloughs? Is there a pending furlough or a layoff for this particular employee? Has the pay structure changed? Have they gone maybe to straight commission or piece rate or something else on there? If any of that has happened and it affects the income calculation negatively, well, this has to go back to the underwriter. And I found this out the hard way on a file. Had a borrower where the spouse had a reduction in hours. Fortunately, it wasn't enough to disqualify them for the loan, but it created a delay because we had to re-verify the income. We had to show that the debt ratios still work, send it back to the underwriter, and it's going to cause at least a day delay on the closing on that. And I didn't know that we were going to be asking anything more than just the yes-no question on that one. But the other thing you want to do is realize that there is a soft pull credit report. Now, a soft pull credit report does not get scores. So if the credit scores have changed, gone up, down, or whatever, we don't care. Whatever your scores were that you qualified with and that your loan was priced out with, you get to keep that. But the purpose of the soft pull credit report is two things. It's to see, have there been any new debts? And did you miss any payments? With a lot of people refinancing right now, there's that temptation to sit there and just kind of go, well, gosh, I'm closing so close to the end of the month. I haven't made my payment yet. I'll just hope that everything goes okay. Don't do that. I will tell my borrowers that if we're closing in the month that we're closing, and if they really want to skip that current month's mortgage payment, I'll let them know that's great, but keep a hair trigger on check by phone or being able to do an automatic draft on your account, because if we're not 100% certain that loan is going to fund and the payoff gets sent by the 29th day of the month, then I'm going to have the borrower make their payment, because you can't afford to miss a mortgage payment on that. But some people will take a vacation from their car payments and say, well, my loan's approved. What can go wrong now? If the loan got approved last week and I'm closing this week, and people will do some things that I think that they're not intentional, but they just don't realize that there's some verification after that. So the other thing is not so obvious, but this does happen once in a while. Anytime that you're sending money to the closing, in the state of Utah and it's more than $10,000, it has to be sent by wire. The wire, the title company has to confirm that they received the wire in order for us to authorize the recording and disbursement of the funds. But the other thing that's checked is, where did the money come from? What was the originating bank and the account number? And it needs to be an account that we as the lender have verified that. So I've had people that have had multiple accounts, and maybe they've got a line of credit that might be enough that they could have done it on their line of credit or what have you. But we're going to check to make sure that the money that came to the title company came from an account where we had verified those funds as sourced and seasoned funds. So just, I mean, if you're so lucky to have, tens of thousands of dollars in multiple accounts, then this is something you need to be concerned about. Most people only got that money in one account, and it's only going to come from that account, and we realize that. But there have been times where people will just really not think about it because, well, I just took the money out of my brokerage account. I, wanted to sell some stocks, and I went ahead and did that, and we never verified that they even had a brokerage account. So those are things that everybody, especially right now in the current environment, needs to be aware of. That just because you sign the closing papers, your loan's not done yet. There are some behind the scenes things that are going to go on there. A soft pull check again on your credit report and a phone call to the employer to make sure that everything is status quo or as it was when we verified it through the most recent pay stub. So hopefully that's some good advice that will prevent you from having an embarrassing moment, or worse, if for whatever reason your loan would not be approved. So thanks for coming into thecreditjungle.com today. This is George Anderson. You can push button, get mortgage professional, and I would love to talk with you personally about your situation, and I hope to see you soon. Thanks.